All right. Thank you for joining us, everyone. My name is Emmy Sauls, and I'm the director here at LenderLogix in the marketing department. We've got Patrick O'Brien on the call. He is our CEO, and he'll be leading our presentation. So it is just after 2:30. We're going to go ahead and kick this off. Pat, I'm going to pass it to you. If you have any questions, by the way, throw them into the chat. We're not going to do a live Q&A on the call, but we will follow up with you after the fact. So just wanted to slide that in there before Pat kicks off.
All right, good afternoon, everybody. Leads to loans, optimizing your mortgage funnel. So this topic, I don't know, I find this super interesting because I originated loans for a long period of time, 15 years. And the prevailing wisdom was always, if you wanted to grow your business, increase your business, you just needed to grab more leads. You needed to do those activities to get more leads. And while that's true, being in business and kind of understanding sales metrics, you start to learn that there's a lot more other levers you can kind of pull as a salesperson beyond just out there finding more leads to grow your business. So this is a topic we talk a lot about with loan officers and kind of trying to optimize the flow of leads from, the point in time that they're introduced to us all the way through till closing. There's this quote that is popular in sales circles that all sales is a leaky funnel. I don't know where it came from, but if you think of sales as a funnel, all opportunities kind of go in that top of the funnel, right? Like all leads go in the top of the funnel and closings come out the bottom. And obviously we want to do as much to pour as many leads in the top of that funnel as possible. But as those leads traverse through our funnel, there's leaks. Not all leads that we take in the top of our funnel turn into closings, right? It's like if I get 500 leads, 500 leads do not close. So there's at different parts of the funnel, we have leads kind of spilling out. We have leakage, and what we want to do is try to take a look at the things we can do throughout the point of that funnel to kind of like patch it up a little bit, so that it's not just about finding more leads, but it's about improving those conversion rates all the way down the funnel to get those loans to close. How we interact with consumers and kind of the strategies that we undertake at every stage of that funnel, from lead all the way down through closing, impacts what those conversion rates are. And the interactions that we have with them kind of earlier in the process really kind of have an outsized impact on whether those leads make it to closing. We talk to a lot of loan officers and a lot of lenders, and everybody measures applications. It's like if I asked a loan officer how many apps they did last year, like most loan officers would be able to answer that question. If I asked them how much business they closed last year, what their closings were, most lenders would be able to ask that question. Most loan officers would be able to answer that question. They know those numbers. But a lot of times what we find is they don't know those numbers further up the funnel. How many leads did they interact with? How many pre-approvals did they issue? And how many of those, pre-approvals turned into applications? I think that's kind of just the way the mortgage business is kind of operated historically. Is those have been the numbers we've always measured: apps, closings, without paying a lot of attention kind of into those metrics further up funnel. And really what that's caused us to do is, our guy here on the left-hand side of the screen, he's hanging around the bottom of the funnel. He's just worried about how many apps is he taking and how many deals is he closing. He's not kind of dealing with those further up funnel metrics. And that to a certain extent works in certain markets. Actually I'm borrowing this analogy from Rocket that recently was kind of talking about this. And in the market we're coming out of in the last 18 to 24 months, you could talk to a lead and that person could be a week, 2 weeks, a month away from signing a contract. The velocity of business is moving so quickly that from the point in time that we talked to somebody to the point in time that that person, wanted to get a mortgage was a matter of weeks, under a month. And there were plenty of those borrowers to go around. And now we're finding ourselves in a situation where loan officers need to engage with the borrower for a longer period of time. You might need to talk to a borrower for 6 months, 12 months, the 18 months, they might be 18 months away from getting a contract on a house. So they're coming into our ecosystem, but they're not kind of ready, quite yet ready to sign that contract. And the approach that we take as loan officers, lenders to, deal with how to engage with those borrowers, given those market dynamics, is super important, kind of making sure that we're kind of sticking with that borrower, throughout that their entire life cycle. Like I said before, you talk to most loan officers, and most loan officers are going to know how many apps, how many have you done this month? How much have you closed year to date? Those are all metrics that we've tracked for years as an industry. But it's really important for loan officers, sales managers, to understand what's the number of leads that we're even interacting with. I can't close. I'm getting 200 leads a year. I'm not going to close 200 deals, right? Like, I need to understand a little bit further up. What do my numbers look like? So loan officers need to kind of obsessively focus on those numbers. How many leads? How many leads in a given month are you dealing with? How many leads in a given year are you dealing with? Equally as important is, what is that conversion rate? How many of those leads are we converting to pre-approvals or pre-qualifications? We're certainly into a very heavy purchase market at this point. We can't get a lead to close if that first does not get qualified or pre-approved. Like, that's just a critical part of that borrower's journey. So what's the percentage of those leads that we're converting to pre-approvals? What are the things we can do to improve that? That's what we're here to talk about. Of those pre-approvals, how many of those convert to loan applications? If I were to ask a loan officer or a sales manager, how many pre-approvals does a given loan officer have? Most don't know. Most of them have no clue. They're not measuring those further up the funnel metrics. But certainly there's strategies that a loan officer can undertake, to improve those metrics, to improve that conversion percentage from pre-approval to application. And then, of course, you have your application to closing, your pull-through rate. Most people kind of know that number. They kind of understand that there's going to be a certain percentage of fallout from application to closing, but certainly there's strategies there to improve those metrics as well. So we're kind of going to talk about those different stages of that funnel, and what are the strategies? What are people doing? What are the technologies that people can use to kind of improve those things, especially in a market where, focusing strictly on the number of leads that are going in the top of the funnel is going to be a difficult thing to do. Excuse me real quick while I take a sip of water. What we did was we created this tool, because we play around with a lot of these numbers ourselves and just kind of taking a look at what our clients are up to. So we figured, hey, what the heck, why not kind of create a calculator that we can kind of share out with people, loan officers, whoever, so they can kind of take a look at these metrics themselves and play around with them a little bit and see how changing these figures impacts their business. So I'm gonna pull this open right here. Whoops, down the wrong tab there. And basically what we have here is this calculator that we'll make available. We'll just throw the link in the chat here in a little bit. And what it lets a loan officer, a sales manager do is take a look at some basic numbers that most people are going to know. I should know my average loan amount, right? Like, that's easy to find. Obviously, I should know what my commission rate is. So kind of in this sample we're working with here, we've got a loan officer that has an average loan size of $225,000 and is making 90 basis points. And what we're going to do is just kind of play around with some of these numbers here and take a look at, like, let's say we got a loan officer who's getting 5 leads a week, right? Like, How does that loan officer get leads? Well, maybe they have past customers, realtor relationships, whatever the case is, centers of influence, and they're taking in those five leads a week. So 250 leads in a given year. If that loan officer converts in this situation, we're just going to, I'll stick with the defaults here. 60% of those leads to pre-approvals, of those 250 leads, they're going to have 150 pre-approved clients. What's the reason there? Like, why might a lead not turn into a pre-approval? Well, there's a lot of reasons, right? Like, person could have bad credit, they could not qualify. Maybe we just didn't get a hold of the person. There's a lot of reasons why that might be the case. And then in this situation again, so of those 150 pre-approvals, we're going to say 50% of those convert to loan applications. Well, why is that 50%? Why doesn't every pre-approval convert to a loan application? There's a lot of reasons, like borrowers don't find houses, their circumstances change, they get priced out of the market. Who knows? There's a lot of reasons why a pre-approval doesn't make it to a loan application. But there's things we can do to increase those rates, and that's what we're here to talk about. And again, everybody knows that of those 75 applications, they're not all going to close. There's going to be fallout. Well, why do loans fall out? The house doesn't appraise. There was some new piece of information. The loan officer took a bad loan application, didn't disclose something up front or something like that. There's a lot of reasons. But in this scenario, if we have a loan officer that makes 90 basis points on an average loan size of 225,000, gets 250 leads a year, and converts these percentages down their funnel, 60% of their leads turn to pre-approvals, 50% of their pre-approvals turn to loan applications, 90% of their applications turn to closings. That LO is going to do $15 million a year in volume, and they're going to make 137 grand. And that's great. What are the things we can do? And we're going to play around with this calculator a little bit to kind of show, how can we do better? How can we make more money? How can we do better with less leads? That type of thing. So bear with me one second. I just got to pull up my keynote presentation again. Okay, so let's first start talking about the number of leads. How do we get more leads? Like that was always the thing. I was a loan officer, always cracked me up. So like, you got to get more leads. Oh, okay. A lot easier said than done. But what are the things we can do to grow the number of leads that are kind of going in the top of that funnel? We can develop new relationships with realtors. Again, a lot easier said than done. But that's those are always the go-to places, historically, where to find new deals. Go find more realtors. We can run home buyer education seminars, right? Like, we can educate our borrowers, get them to come to classes, capture their information, ultimately pre-qualify them. They find a house, they get a mortgage. Those are some of the more traditional strategies, but there's other things to look at too. Let's say your online loan application, a lot of the online loan application is kind of like the front door for the borrower, right? Excuse me. Hey, apply now, come to my website, fill out this application. Well, what's your online loan application look like? Take a look at yours. Most, quite honestly, are pretty terrible. Click apply now, and it's hey, create an account. It's like, what? I don't even know you. Why am I gonna sit here and create an account? I need to kind of be led down the path a little bit more before I start handing over personal information. But that front door is really important. So taking a look at kind of what's the conduit for us to kind of get that information, in the door, so we can ultimately convert that borrower. That's one way that we can kind of increase the number of people that we're interacting with, is taking a look at what that online loan application looks like. And like I said, a lot of them are pretty bad out there. So, if you click on yours and you wouldn't fill it out, how can we expect our borrowers to do that? Excuse me. Lead capture landing pages is an interesting one, which, has kind of been a newer thing in the last few years. Most loan officers, if you have marketing efforts, emails, excuse me, CRM sending things out, it's normally driving people to kind of like an apply now link. It's like, well, is the customer ready to apply? We know it's not a bona fide mortgage application, but what is the borrower, what's that prospect supposed to think? I'm not ready to apply. Do I not fill this thing out? So those types of things, like having not a clear path for us to engage with that borrower, oftentimes, we're going to see fallout. We're not going to be able to get as many leads in the door, because we're kind of creating some friction for our prospect to do business with us. Really important to look at things. There's Lead Pops is a company out there that kind of builds landing pages for loan officers around different things than just apply now, right? Like our borrower might not be ready to apply. So how do we get some of their information to kind of help them out a little bit? Community partnerships. What are things that we can do? Go out and, co-branded efforts with employers and things like that. All key components of helping to build out those leads a little bit. And obviously, like, there's social media, just being out there, exposing our brand to people, getting them to give us their information to kind of pull them in a little bit deeper. How do we get of those leads that we collect? How do we get more of them to convert to pre-approvals? In the scenario, I'm going to keep flipping around here to I'm going to keep flipping around to my browser here to show this calculator. How do we get more of these leads to convert to pre-approvals? Every loan officer is going to say, right, like, well, every borrower doesn't qualify. They have bad credit. They don't, they don't qualify right now. They had a bankruptcy, whatever the case is. But if this, kind of fictitious loan officer, instead of converting only 60% of their leads to pre-approvals and making 137,000, could get that number to 70%, that's another $22,000 in income for that loan officer, just by increasing by about 20% the percentage of their leads that they convert to pre-approvals. Now, how do they get there? I'm gonna slip back to my screen here. Working with, there's credit repair agencies that we can be in touch with, or kind of online utilities where Credit Expert, where we can tell people what they need to do to their credit, like becoming more expert in those things in order to demonstrate to our clients, like, hey, we can get you in a place to get you to qualify. We can send you to a credit repair agency that's going to send that information back to us. There's other platforms. FinLocker is one to think of, where you have borrowers kind of being more engaged on a regular basis when they're not quite ready to get to that point yet. So that there's a lot of things out there. Product knowledge. Every loan officer knows, like, maybe I can't get the borrower qualified for this loan, but I can get him qualified for that loan. Maybe I can't get him with the FHA minimum down, but if I change it to 5% down, in a 20-year term, I can get that approved. Those are things we can do to kind of help move that borrower maybe into that qualified versus unqualified stage to kind of increase that conversion percentage. CRM, outreach to borrowers that aren't quite ready, online reviews, like making sure that borrower knows that we're a trustworthy, reputable loan officer to do business with. Doc uploading, getting borrowers engaged earlier in the process, getting them invested in the process, increases the likelihood that borrower is going to kind of continue down the road with us to pre-approval. Even things like just calling the borrower back more, right? Like sometimes we get a lead, it's like we try the borrower like 1 or 2 times, like, we didn't get a hold of them. Being a little bit more vigilant in our follow-up process. That borrowers raise their hand, said they're interested in moving ahead with a pre-approval. What are the things we can do? This is kind of our sweet spot where we pay a lot of attention to, and that is, once we've got those borrowers pre-qualified, what can we do to turn them into a loan application? Every borrower that we talk to and we pre-qualify does not end up financing a house with us, unfortunately. But what are the things we can do to increase those percentages? make the borrower a better home buyer. A borrower is not going to be a successful home buyer if they do not have clarity in what their mortgage payment is. A borrower is not going to go execute a contract of sale, be an effective, bidding on houses or accepting counteroffers if they don't have clarity in what their payment is, period. So obfuscating that information from our borrower, not making it clear about what the payment's ultimately going to be, doesn't do us any favors. Not being clear about what the closing costs are, sort of hiding that information from borrower doesn't make that borrower a better home buyer. So when we can be clear about what those things are, put that power into the hand of our borrower so they know for every given circumstance, what their payment's going to be, how much cash they need to close. That's what makes a successful home buyer. The ability to clearly look at different scenarios and compare those scenarios in a concise way that a borrower can understand. That makes a borrower an effective home buyer. That makes them an aggressive, a confident home buyer that's going to win a deal, that's not going to sit on the sidelines. You hear a lot about, especially in the market we're coming out of, oh, my borrower couldn't find a house. They were priced out of a house. It's like, I guess, but did they know? Did they know exactly what was going to happen if they took that counteroffer, if they increased their offer by $5,000? Did they know, or was it something that, you thought they knew, or you expected them to go online and just run some random mortgage calculator and figure that out? We as loan officers have to take control of that experience, dial in that user experience based on the type of loan that borrower qualifies, because we have all that information. We have this super rich piece of information about, all what that borrower qualifies for. We can translate that into a user experience for the buyer to give them a really custom tailored, like a mortgage calculator, get your pre-qual letter, know exactly what it is for the scenario they qualify to make that person a successful home buyer. Going to flip back to my calculator here. And let's just say in the same scenario, instead of a loan officer saying, well, only half the people who I pre-qualify actually buy a house. First of all, most loan officers have no clue because they're not measuring what those numbers are. But let's say we can increase that number by 20%. We can get that number up to 60% of their pre-approvals turned to loan applications because they're doing a better job educating that home buyer, making them, confident, assertive home buyer. And equally as important, keeping them sticky with you so they don't find themselves off at a competitor getting information. In that situation, I didn't look at what my first number was here. So in this situation, we got the loan officers making $159,000. They're doing $17 million a year in volume on 88 applications. What happens if we can get that to 60%? Now they're up to 192,000, $21 million in volume, 105 apps. Just by tweaking how they were dealing with that borrower during that pre-qualified, pre-approved phase of the process. It's such an important thing. Like, we can influence how successful a home buyer is at buying a house. This is our little commercial. So our users, when they use our quick qual utility, they see an increase in conversion by 30%. So when a loan officer is using our platform, the percentage of buyers that they're able to convert from pre-approval to loan application shoots up by 30% because they're keeping that buyer in their ecosystem. They're giving the buyer the information they need in order to be a successful home buyer. So there are both manual strategies one can undertake to kind of help a buyer down that road, but certainly there's technology solutions like ours, and there's others on the market as well that will keep that buyer engaged in your market, in your ecosystem, instead of that buyer finding themselves off on Rocket or LendingTree or NerdWallet or one of these other places where, quite honestly, they're just going to be sold as a lead to your competitor. So, when you can keep a buyer in your ecosystem and answer those questions using technology that you provide that buyer, it really changes the game, and you'll see instantaneous increase in those conversion rates. And then of course, again, this is one that most people kind of measure today, but their pull-through rate, right? Like once I get that buyer into application, what's the percentage of loans that I can get into closing? And this is probably one that loan officers can influence the least, but you can influence it. There are things you can do to increase that pull-through rate. One of the things that we see is one of the most impactful things is collecting fees from a buyer upfront as early in the process as possible once you have intent to proceed. So collecting an appraisal fee, getting that buyer invested in the transaction. A buyer that has given you a check for $500 or $600 is going to be significantly less likely to walk away for 1/8% in interest rate or 1/4% in interest rate when some trigger lead company calls them offering a lower interest rate. Automating that process and taking it out of the hands of the loan officers is a huge lift. I was guilty of it as a loan officer. You kind of strike these mini deals with the borrower because it's like kind of awkward to get that money from them. It's like, oh, I need to get this appraisal fee from you. Oh, don't worry about it. We'll just collect it at closing. Fail. When we have that borrower invested earlier on, it's certainly going to increase the likelihood that they're going to pull through. One of the products we offer is an automated upfront fee solution where it just takes the loan officer out of it. The borrower gets a text message once there's intent to proceed. They pay on their device. All the information goes into the LOS. The borrower gets the receipt. Done deal. None of this, oh, I'll pay in 2 weeks or anything like that. It's like, it's just part of the process. You build it in, it's automated. And by doing something like that, you do your loan officers a favor because you just take them out of that transaction altogether. Other things, just being transparent. You see a lot of loan officers that like have crazy fallout rates because they weren't very transparent with the buyer. There's surprises. Buyers don't want surprises when they sign their docs. If there's a surprise, that's going to increase the likelihood that they're going to talk to somebody else, to kind of confirm things. And we all know as loan officers, if somebody comes to us shopping a competitor, we're going to sharpen our pencil a little bit. So being transparent the entire way through with a buyer, making sure that they, understand what the numbers are and that they ultimately match the numbers that they sign it on the application is critical. Other things, appraisal management. Some lenders manage appraisals based on spreadsheets because we all know appraisals have a huge impact, right? Like under appraisals, like going to be one of the primary reasons why a deal might not make it through. But there's certainly things we can do as institutions to kind of take a look at that process and figure out how are we keeping people informed? How are we moving that process along? How are we communicating bad news in the event that a house under appraises? What are the technical solutions we have in place? Are we updating people via SMS, keeping them engaged throughout the entire process so they know when their loan has been submitted to underwriting, when the appraisals come back, keeping the agents informed so that in the event that something does come up, we can kind of deal with it instead of just, not communicating that bad news early enough to be able to save the deal. And also beyond that, like overall product knowledge. A seasoned loan officer kind of knows what to do in the scenario where something goes wrong. Can I flip this borrower to another product? Can we go into single premium mortgage insurance and lower that debt ratio enough to get it through AU? Can I massage the loan terms enough to kind of get it approved? Like those are product knowledge things that come with experience. So there's technical solutions we can undertake. And then there's also just kind of the beautiful things that come with a fair amount of experience as a loan officer. So I'm going to switch back to my calculator one more time here. And just even marginal improvement of our pull-through rate. I mean, if this loan officer is doing $21 million in application volume, and we can get that to 93%, they just close another $1 million. Just by making a small tweak to our process to increase that pull through. We started collecting upfront fees. So we're going to get a higher pull through percentage. Those are the things we can implement, we can influence to kind of help that transaction along. There's a lot of things that we can't influence, but there's plenty of things that we can influence. I play around with this calculator quite a bit, and we're gonna, Emmy, if you can, like, maybe you want to like put it in the chat or something like that.
Just dropped it.
Okay, cool. So, you know, we can look at these metrics along the funnel and just kind of play with it. Like, well, you know, what happens if, you know, next year we only get 200 leads because, you know, the market's going down? What are the things we can improve in order to make sure that we make the same amount of money on smaller volume? You know, there's things we can do at each of these stages of the pipeline to increase the likelihood that it moves further down that funnel. So, you know, we'd encourage you to take a look at, you know, different solutions. We'd encourage you to take a look at our Quick Qual product, which again, supercharges that pre-approval to application conversion percentage. But again, there's other, you know, you can buy leads if you need to increase, you know, the number of leads coming through. And ultimately, kind of once you have this dialed in and you know what your numbers are, you can really dive into, you know, so if I'm making $162,000 in this scenario on 200 leads, $162,000 on 200 leads, each lead to me is worth $810. So if I'm a loan officer and I have an understanding of, okay, every lead that I get is worth $800, I'm going to treat it that way. I'm going to treat it like it's $800, like somebody's handing me $800. Would you only call a borrower back? You know, if somebody was giving you $800, would you only call them once? You know, probably not. You call them more times. You know, I'd call somebody a lot of times for $800. You know, so understanding what those, you know, what a lead is worth given in that number is going to be different depending on how you perform in those metrics down funnel. So paying attention to them, knowing them, knowing what you can tweak to improve those numbers are all things that will materially impact your business significantly more than just saying, I need to find new leads. These are the levers that a seasoned loan officer can pull and make incremental improvement to in order to material impact, you know, how much business they're doing and ultimately how much money they're making. And you can start to make decisions based on, you know, what those impacts will make to the income scenario, whether you're, you know, a company owner, whether you're a sales manager, whether you're a loan officer. So apparently we shared this out with you. I hope that you play around with it. I hope you find it useful. I find it pretty useful. And in closing, you know, if you wanted to see what our solutions look like, scan the QR code, send us an email. You know, we can talk through kind of what we see from our clients in terms of what they're seeing in terms of those conversion percentages and what people are doing to improve them. It's a tough market out there, right? Like the idea that we're just going to be drinking from this fire hose of leads certainly isn't the case any longer. So you know, doing a better job with the leads that we have is a worthwhile endeavor. So appreciate your time. You know, connect with me on LinkedIn, send me an email, scan the QR code. Love to connect with you to talk about things more. Anything else you'd hope I'd cover, Emmy?
Nope, you hit it all.
All right. Well, we appreciate your time, guys. 4 minutes over, so apologize for going a little long-winded, but you know, if there's anything we can help you with, please, you know where to find us.
Thanks, guys.
See you later.